Today is yet another reminder that it's all about buying and holding good companies. Investor Beat starts now. Thanks for watching. I'm Alison Southwick, and joining me in studio is Ron Gross. We've got a lot of earnings to jump into, but before we do, just want to say the Dow is down again today. I think more than 100 points. Should I be freaking out?
No.
All right, let's move on to earnings then. Chipotle is having a great day in the market after yesterday's stellar earnings report. Revenue increased more than 20%, and same-store sales grew more than 9%. So, Ron, how much of this do you think is a bump due to the legalization of marijuana in Colorado?
No comment. Well, can't hurt though, right? Listen, I think they're putting up incredible numbers. That 9%, a little more than 9% same-store sales is just wonderful performance. They are seeing some food cost inflation, which is to be expected, I think, but they have the ability to pass through price increases every now and again because they have such a loyal customer base. Pricing power is a really great thing to have, so they can offset some of those rising costs by raising prices. And they've still got a really long growth runway ahead of them, so they're doing great.
Yeah, speaking of that long growth runway, they're looking to open up another 200 restaurants in 2014, which seems pretty aggressive, especially when you consider that there are 3 Chipotles within a 3-mile radius of our office. So, I mean, at what point do we reach burrito saturation?
Ooh, that sounds tasty. I actually think they're pretty careful about this, even though anecdotally you do make a good point. But they like to see the demand really before they'll put in the supply, and they're pretty careful. There's about 1,600 stores now. We think they probably could get to 3,600 stores.
Wow.
And that's just domestically. And that's not including the shop house concept. They've got a new pizza concept that is rolling out, and they're testing it, which is really interesting. That same kind of process where you kind of go down the assembly line for a pizza made in 2 minutes. So there's other avenues of growth, even when the burritos kind of reach saturation.
Are you more bullish on shop house or the pizza concept?
Well, I'm a New York guy, so I love pizza, but I love specific pizza. So I might have to go shop house.
All right. Amazon took a hit today after they missed analyst expectations. Sales increased 20% to $25.6 billion, but analysts wanted to see $26 billion. Ron, it's not unusual for analysts to miss, or for Amazon to miss analyst expectations. However, usually when they do it, the stock still goes up after they announce.
It's true. It's really true. I think perhaps people are getting a little bit fatigued about saying the same old excuse, which is actually a valid excuse in my opinion, but I think people are fatiguing on it, which is the company's operating expenses are so high because they're building for the future. That's why profits don't look that rosy. But that is the truth, and if you're a believer in Jeff Bezos and Amazon, I think you have to take that at face value. If you're investing in Amazon for profits today, you're really in the wrong stock, probably. I think another concern is that they said they may raise prices on Prime membership, which would be great because all that money would flow right to the bottom line. But there's some concerns about, do they have to do that? Is it out of necessity? Will it hurt the Prime business? I actually think it'll be okay. People seem to really like Prime. I don't think an additional $20 a year, maybe $30, would hurt too badly.
So is this a buy opportunity?
For me, it is not. I think Amazon is an amazing company, and I would actually love to own it, but at current prices, it's not for me.
All right. Google is up today after last night's Q4 earnings release. They mostly met analyst expectations with a miss on earnings per share thanks to Motorola. Additionally, Google announced its first stock split. It will happen on April 2, and it will create a new class of C shares with no voting power. So this was a pretty controversial decision.
Yeah, people don't think it's very shareholder friendly. It's Brin & Page's way of retaining control, voting control over the company. Holders of Class A stock will get one share of Class C. It will not have voting power. It will trade separately. People are really concerned that the two will not trade at similar prices because the C does not have voting rights. So this was actually held up in litigation for a while. And the only real reason it's going through now is that Brin & Page and Google have decided that there will be monetary payments to Class C shareholders if the prices diverge to a certain extent, too much from each other, and that'll kind of make Class C shareholders whole, if you will. And so because of that, we're going to see this go through.
All right, so then we learned, we talked about Motorola here, how they kind of missed on earnings per share because of Motorola. But we also learned that they sold Motorola on Wednesday, or they're going to sell it to Lenovo. So how much of a drag was Motorola? I mean, is the stock just going to soar in 2014?
No. Motorola contributed to about $2 billion of operating losses since 2012 when they acquired it. So shedding that will be helpful. It's not a make or break decision. I think it is a good one to get rid of it. I think hardware was a distraction to Google. They're keeping some of the important patents that they perhaps even wanted more so than the hardware. And so let it go and move on with the core business.
All right, well, that's going to do it for earnings headlines today. But I want to know, a look ahead, what's one stock on your radar?
I am watching LinkedIn, which reports on Thursday of next week. Last quarter, they issued what people thought was weak guidance for this current quarter that we're waiting for. They only guided for 37% increase in revenue. That wasn't enough for folks. But we own the stock in $1 million portfolio. I'm obviously very interested to see how growth is looking and then what guidance looks like for the coming rest of the year.
All right, well, for Ron Gross, I'm Alison Southwick. Thanks for watching.